Testing. So, guys, we're about to go live in about 3 more minutes. 3 more minutes. One more minute. One more minute. All right, guys, it is time to start. I want to welcome everyone back to another episode of Forex Tech Magazine. Hope you guys are doing well. Let me turn this music down here. Before we start, just want to get into a little bit of housekeeping here. I want to go over our disclaimer. Even though we have the license to be a financial advisor, to give you financial advice and work in the financial industry, we are not in the business of giving financial advice to small businesses or individuals. If you have any questions or any type of concerns about your financial situation, our advice to you would be to seek out the assistance of a licensed, competent advisor. Okay? The purpose for this channel is solely for entertainment and education purposes only, not to give any type of financial advice. All right, so now that we got that out of the way, let's jump right into it. Let's start out looking at what went right, what went wrong, right? And let's talk about where we at for the week and what it's going to be looking like maybe perhaps for the week ahead. All right, so first thing I want to do is I want to talk about what went right. Okay, so what we did is yesterday, if you remember, we went in and we put some trades in place. And what we did is we looked at where the market was at and we anticipated what may happen. Now, I didn't really go into detail, and I think I actually put the trades in after the broadcast ended. Just for the sake of time, I want to try to keep a broadcast to about an hour each time, maybe a little bit over, but no more than really try to get an hour 15. So I put the trades in afterwards, but I kind of gave you the information as far as what direction I was going to be trading in and what currency pairs I was going to be trading in. What I like to do and the way I like to trade is I like to try to let the market come to me versus me try to chase the market. You see a lot of folks out here They're chasing like 10 or 15 pips or 7 pips or 8 pips, whatever at a time. It's not the way I like to trade. It's more of kind of like a scalping type trading technique. I'm more of a swing trader or a position trader, just because you get more pips over time than you would just picking up little pips here and there. And for me, it's more practical for me, and it works better towards my type of trading tolerance. Some people are a little bit more riskier, and they enjoy the rush of being able to get in and get out, and that's fine. That's great. If it works for you, do it by all means. But for me, it doesn't really work that well. All right, so that's the reason why I put my trades in. Let the market come to me. One of the things that I did, and I don't think you were privy to it the last time, was that when I went in, I actually put in some support and resistance lines. Now, if you're not familiar with support and resistance lines, you really should familiarize yourself with support and resistance lines. And I think maybe we had talked about it before, I'm not sure. But if we haven't, for the sake of review and the sake of being able to be on the same page with this broadcast, I want to just kind of show you what I'm talking about here. So support lines, if you think of support line, think of where buyers come into the market. This is all about supply and demand, right? So once price gets far enough down, right? So let's look at this example here. If you look over here to the far left, once price comes far enough low, right here, far enough low, right? Buyers tend to come into the market to push the price up, right? Once the price comes up to a high, right? Sellers come in, and this is what we call resistance, right? Support, resistance. Sellers come in, and they start to sell the the currency pair that they own, right, to make a profit. Because remember, if I bought it down here and it pushes all the way up here, that's going to be a significant profit for me. And so what I'm going to do is going to sell it, right? And as I sell, more people start to sell on the way, more people start to sell on the way, more people sell on the way, sell on the way, sell on the way. And it comes back down to that level of support again, right? Where buyers once again agree it's a pretty cheap price, and then they want to come in and they want to start trying to buy the product and push it back up. Now, sometimes there could just be a news cycle, it could be something that's going on that makes that currency pair out of favor. Whereas it can hit the support and still continue to fall, and it just goes down to the next level of support, right? What you should be looking at when you're going in and you're looking to buy and trade, you're looking to buy and sell something, you should be looking at where the price is at in relation to support and resistance, right? Because if it's right there by resistance, it's probably not going to be a good place to buy, unless of course you got a breakout that's occurring, right? If it's right here by support, it's probably not a good place to purchase, right? Unless, once again, it's one of those things whereas, maybe there's something positive news cycles coming out and the bottom is starting to form and it's going to go continue, it's going to continue on up. Because if you look at the situation right here, and it's right here by support, and it just crashes all the way through, right? So those are areas that you really got to be mindful, because they can create support and resistance, can create U-turns in the market, right? So where the market all of a sudden is trending in one direction, next thing you know, now it's shooting back in the opposite direction, okay? So now with that little bit of background in place, all right, a little bit of knowledge there, I want to bring you over to what we were trading yesterday, right, and what we put in place yesterday. So if you remember the setup yesterday, excuse me, took a slip. If you remember the setup from yesterday, right, and remember we're going to go back and we're going to look at the 3 o'clock candle, right? 3 o'clock candle is here, right? So although the currency pair was in an uptrend, trending up, right? Looking at that 3 o'clock candle, making that up, me knowing that resistance is up in this area, and the way that I knew that is if you look back towards the left, you see where it was resistance, where price went through, came back down, momentarily came back down. Once again, resistance, price hit the resistance line, came back down, hit it again, come back down, hit it again, came back down, hit it again, came back down, again down, right? And it just done this over and over again. My assumption was that price would probably hit this resistance line, right? And then make a retrace back down, right? And so here was my buy, and here was my take profit. And then of course this is my stop loss here, right? Now, under normal circumstances, that was the proper guess to have. But unfortunately, well, I say unfortunately, fortunately for some people who made money yesterday, um, price hit the resistance and it actually closed above and continued on up through resistance. Right. This right here could very well be, continuation where price is going to seek out a new level of resistance before it starts to come back down again. It could be, or price could just be hanging out up here for a moment before it comes back down. Right. No real way to know that, right? And that's the reason why we trade, and that's the reason why money management is so important, because we don't know. It's 50-50. Either price can continue to go up or price is going to drop back down, right? Another way that we could probably kind of check that, just to kind of see. Once again, this is just best guesstimate here. You put your fib lines in place. Put our fib lines in place. Looks like price came back. According to the Fibonacci sequence here, it looks like it's made a completion, right? From red to red, looks like it's made a completion. So it could be highly probable that, that this price for this particular currency pair right here, you're gonna see a retractment. You're gonna see a pullback. Now, it doesn't necessarily always stop at the fib line, as you can see here, right? This bottom one, right? Here's A, B, and C, and then the D is going to be, extension is going to be out here to this red line, right? Boom. Price hit that target, but it kept on through, right? So there's no guarantee that it's going to stop there and then do a pullback, but it's high probability that it will, right? So given the fact that it just went through, a resistance zone, given the fact that it just hit this fib number, this could definitely be a candidate for a pullback. And how deep the pullback is going to be, don't know. But on that pullback, that could be something where, as we say on this open here, right, we're going to be looking to sell versus looking to buy. Once again, don't know if it's going to happen like that. Something that as the night goes on, or as the morning goes on, I'll look at a little bit deeper just to try to see if it is a trade that we want to make or not. Okay, but anyway, nonetheless, this trade never happened yesterday because the entry buy was never met. Price did not go down; it continued on up. Okay, and once again, could have went in and tried to chase the trade, but that's not the way I saw it playing out, and I wasn't about to just jump in there just because I saw price going up and try to catch something, and I didn't really have a trade or a plan set up to trade it. And that's the most important thing. You got to have a plan set up to trade it. One thing I did see someone else do a while ago, they set up a straddle, whereas they try to set their buy 10 pips above the 3 a.m. close and a sell 10 pips below a 3 a.m. Candlestick. And the idea was that if the price moved up, then they were going to catch the buy on the way up, and if the price moved down, they would be, enter into a sell position on the way down. My thoughts on that is, if your software allows you to do that, that may or may not be good. The caveat with that is just, getting whipsawed out of a trade. Don't know if it's something that you want to, necessarily do unless you really understand what it is that you're doing. And I think that, like I said, I know there's a lot of different softwares out there, especially once it's for overseas traders, that allow you to do some things that you can't necessarily do in the States. But, just be careful with whatever way you're going to trade, however you're going to trade. And ultimately, just practice really good money management. It's 3 things that you should have every time you trade. You should have your entry price, you should have your take profit price, and then you should have your stop loss, right? Most people trade, they got the entry price, which is going to be market, right? They have their take profit price, which is to the moon, right? But they don't have a stop loss. The stop loss, they always get that mental stop loss in place. And the problem with that is because trading can be emotional, especially when you start seeing your trade goes against you, going against you. Um, you're more likely to try to adjust that stop loss to try to stop you from having a loss than you would be to just go ahead and allow it to hit, and then take that loss, get out, and look for another entry, later that day or maybe the next day or whatever. Okay. Me personally, I believe in using the stop loss, and I'll take a loss, and because I know, losses you can make it back up. It's not a problem, right? It's part of the game, how the game is played. Yeah. Let's go to Great Britain Pound. All right, so here goes another one. This one, same thing. Once again, looking at your support and resistance lines, and they're all over. And all you got to do is just look for these market U-turns, and you can mark it out and see for yourself where they're at. Once again, you'll see where price came down, hit the support, came back up, hit this resistance line here, right? Sellers came in and decided they want to sell, went down, came back up. Sellers still said, nope, we want to sell some more. Comes down, hit the support. Buyer said, we want to buy. Comes back up, comes down, comes up, comes down, goes up. Crazy. But what's crazy about it, if you look where these lines are at, you'll see U-turns in the market, right? U-turns in the market. And that's what you want to look for when you're trying to locate your support and resistance lines. And all you got to do, just start to the far left of your chart. Just go over, as far as you want or wherever. And just start picking them out, like boom, boom, right? And as you pick them out, when you start coming back over here to the right side of your chart, you'll see how they line up almost perfectly with where your chart is at, right? And so once again, it's a good idea to kind of like, just as a reference point. It's kind of like when you go to the mall or something and you see those signs and when you're trying to like find a store and they got that sign that says you are here, right? That's what support and resistance lines do for you, right? It shows you where you're at in relation to the trade. Always remember that every trade that you do or every currency pair pretty much operates on a 24-hour news cycle, right? And or 24-hour cycle, right? And during that 24-hour cycle, all right, you're gonna have a high and a low that's gonna form during that 24-hour cycle, right? And so your job as a trader is to try to kind of figure out where you are in relation to that high and that low forming, right? And if you kind of think about like a clock on a wall, you got 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock, 6 o'clock, whatever. Right, the 12 and the 6 is going to represent the high and the low, right? And you just got to kind of figure out where you at in relation to that. And support and resistant lines help you really kind of figure out where you are in relations to that, okay? Now, is it a perfect science? No, of course not. Nothing is. Things change all the time, right? But let's go back here and look, right? So, here we go. Now, this right here was 3 a.m. yesterday candlestick, right? And I went in and I put in a short order on this one, right? And really, I probably should have went ahead and put the buy. And I think I put the short on this one right here. Let's see. Oh yeah, the reason why I put the short on this one right here was just because here's another trick to shrink your candlestick size so that way you get more on your page and that way you kind of see a bigger picture. So if you look at this right here, this currency pair has been going down over time, right? Just going down, 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 right? So the logic with the thinking was, if this thing is going down, right? Don't fight the momentum. Go ahead and let it go down and sell on the way down, right? Every now and then, if you've been trading for any amount of time, you know that you have a move in the market, right? The market takes a breather, right? Then it resumes the move, right? And so in looking at this particular currency pair here, it looked like, okay, hit support, came back up, hit resistance, come back down, hit support, come back down, come back down. All right, it's coming back up. But the idea was that, you know what, if it drops and breaks below support, it would move really well going below, because once again it's dropping below support. But of course that didn't happen. What I should have been doing, I should have been buying, but like I said before, the reason why I didn't buy is the overall general market direction is down, and it's typically not a good idea to buy when the general overall market direction is down. So I went ahead and put on a sell. Anyway, nonetheless, did not get hit, did not get into the trade, which is good, right? Those are my stop loss here. Price actually went through the resistance levels here, where before it had bounced off, right? But it actually went through the resistance level here, right? And as of this morning, right, about an hour ago, it came up and approached this next level of resistance here, and now it's kind of backed off again, right? So the question for this 3 o'clock candle here is, will it continue? Will it go through this resistance and go on to the next level up? Or will it start to make a U-turn and start to come back down? That's the big question. And this candlestick right here is based off of, I believe, the German factory orders came in better than expected. So it's showing that some strength in the economy, even though some of the other numbers may not be as strong as they would like. And so that really kind of helped boost the Great Britain pound numbers. That's across the board. This currency pair has been boosted up this morning. Right? So once again, this trade did not happen. Didn't happen. And sometimes the trade that didn't happen is your best trade, right? Because it's better to have a trade that didn't happen and you didn't lose anything than to have a trade happen, right, and you lose a lot. Let's look at the next one. All right, so the next one here, this is the Great Britain pound, New Zealand dollar. Same thing here, right? You got support, resistance, support, resistance, support, resistance, right? All throughout. Another thing, and I don't know if I mentioned this to you before or not, where you have support at, support can sometimes turn into resistance, and resistance can sometimes turn into support. So if you look right here, if you notice, right, this is the support line. Price goes up, hits this resistance line, comes back down, hits this resistance again, comes back down, right? Finally gets enough energy, it goes through that resistance. It starts to come back down, then all of a sudden, what was once a problem for it, resistance, all of a sudden becomes support, right? And so it's able to go on up through the next level, right? It's right here's kind of another little resistance zone right here, right? And it kind of hangs out and consolidates before it goes up again, hangs out, consolidates before it goes up again, right? Let's look at this right here on a scale. Okay, so once again, coming back, looking at the 3 o'clock candlestick, and I'm seeing this here, right? Now I look back and I said, okay, got the 3 o'clock candlestick. But what has, support and resistance been like during that area over time? And if you look over here, you can see that line right there is definitely a resistance zone, right? Because candlesticks, price comes up, hits it, goes down, comes up, hits it, bounces around a little bit, goes down, hits it, goes down, hits it again, bounces around, goes down, hits it again, before it goes ahead and make that final move down, right? So knowing that, having that in the back of my mind, and when I see price here, right, which is like one candlestick away from hitting that resistance again, first thing in my mind was that, okay, the same move may happen again, whereas price is going to go up, hit that resistance, and come down, so it may be best to put on a sell for this position. Also, if you look at this and you notice, this has been traveling straight up for a while now, right? So two things that was kind of favorable for me was that one, this move may be exhausted right now, right? And it's maybe a good opportunity to go ahead and take the pullback once it hits that resistance, right? And then the other thing was that yeah, it's right there, resistance. So it didn't happen, as you can see. Price had enough energy to push through resistance and go all the way up to where we're at now. And here comes the other thing, what I'm thinking. And once again, I don't know how familiar you are with all your technical indicators and strategies, but to me, this really looks like an Elliott wave pattern. This looks like the first wave of an Elliott wave pattern. And if you're not familiar with Elliott waves, you should definitely go out. There's a lot of information out there on the internet to help you get to understand it, but it's a very powerful technical trading tool. And so Elliott wave comes in like 5 waves, right? So the first wave is the really powerful up wave. The second wave is going to be the pullback. Third wave is even more powerful, wave up. And then the fourth is a pullback, and then the fifth is another powerful wave up. And then it starts to consolidate after that. Just kind of looking at this right here right now is really what it kind of looks like to me. That's what this may be. So we had a consolidation here. It was like you had like a double bottom. Boom, went up, price went up. Boom, price went down. Price broke the neckline, right? Boom, powerful move up, right, from top to bottom. So to me, like I said before, it looks like this is a first wave on an Elliott wave, which if that's the case, should be expecting a pullback. But here's the thing, don't really know when that pullback is going to occur, right? But I would be looking for the pullback, and then off of the pullback, look for the wave 3, which wave 3 is the powerful wave. And not to get too far into it, because I don't want to confuse anyone, but if you know anything about Fibonacci's and Elliott waves, it can be very powerful in helping you set up a really good trade for this currency pairs and others in the future as well. Those are some topics that we can cover at a later date. But for right now, I'm just going to stick with this whole London Open and money management and position sizes, just to kind of give you the basics. So once again, like I always say, if you can get the basics down, you can get everything else. You can go in and you can, basically put your own style on this and trade the ways that you're comfortable, right? And not really worry too much when you take losses, because the losses can get made up by, 1 or 2 wins. All right. So when we look at this one right here, what went right, what went wrong? This one here is a little different story. This one here actually did hit the entry price. All right, let's go look at this. 3 o'clock. Okay, so this one right here, because they actually hit the entry price, I took the support and resistance out, and I just put in the black for the entry price, red for the stop loss, and green for the take profit. All right, so we kind of look at how this played out over time. Okay. Now, if you look right here, it looks like you got a pattern going on as not pattern, but like you got a little bit of upward trend, right? You got a low, higher low, higher high, higher low, higher high, higher low, higher high, higher low. But then right here, you got a lower high, right? So it's kind of like it's starting to move a little sideways with this, right? Now, if you look over here at the 3 o'clock, right? We actually placed our entry, our sell entry about 5 or 10 pips below that bottom wick, right? And then we put our stop loss about the same amount of pips above the top wick. At any rate, over the course of the morning, price was trading up and sideways above our stop loss position, and then it started to come down, right? And when I saw this, I really thought that, okay, well, maybe this thing is going to make a move and it's going to go ahead and go to our take profit, right? Because It looks like it was petering out, right? It was trying to make some new highs, but it wasn't closing at the new highs. The wick was just going up, but sellers were coming in and pushing this thing down. Finally pushed it down far enough for it to hit our entry. And then, as fate would have it, it then proceeded to go back up and hit our stop loss. So needless to say, once again, got stopped out of this trade here, which is fine. It happens. And which, we talked about it before, is that if you're going to be in these trades, you got to kind of understand that, you know what, you're going to take some losses. And that's okay. I'm okay with taking losses. One thing I never want to do, which would be to increase my stop loss, because obviously I could have, right, and pushed it up and say, hey, you know what, I don't want to take that loss. Let me push the stop loss up here somewhere, right? And if I would have did that, it just means that I would have took a bigger loss over time, right? That's why it's so important that when you come in and you place a trade, know exactly how much you're willing to lose, know how much you're trying to make, and know where you're trying to get in at. Don't just go in and chase the market. Don't do market orders, right? Because you're just chasing the market. You're not going to get it for a good price. And 9 times out of 10, you're going to wind up losing in the trade, and you're going to wind up losing more in the trade than you would have if you just went ahead and kind of predetermine your parameters and put them in place ahead, okay? So remember, if you don't learn anything else from me, if you don't take anything else away from me, don't chase. That's the number one thing, okay? Anyway, so this is kind of where we're at now, right? Price is kind of hovering up here. It's kind of off into the side. What I want to do is I want to get rid of this here, and I want to go ahead and I want to put in some, I want to actually put in some support and resistance lines and see how they line up here. See how it meets up. So I'm going to take this out. Remember, folks, support and resistance line, all that is just trying to tell us where we are at in the market, right? Once again, we're at the mall, and we want to know where we're at. We're trying to get to the shoe department, right? Where are we at in relation to the shoe department? Well, you are here. Okay, where is here? All right, so now we know where we're at. Then we kind of figure out how to get to the shoe department, right? Somebody asked one time, like, well, how do you determine, how do you determine where you put your lines? I'm sorry, doing some upkeep here, some housekeeping. People ask me, say, well, how do you know where to put your lines at? How do you know where to put your, your lines for your support and resistance lines, right? How do you know where to put that at? How do you, how do you know which ones? I mean, do you use the candle body? Do you use the candle wick? And I tell people, really, it's kind of I like to use the candle body, right? But I've seen other people use the candle wicks. When I look at support and resistance, I don't look at it as being like a hard, fast, light line. I look at it as being a zone. So, it can be, 5 to 10 pips out from anywhere that you place it, honestly, if not more, right? You just got to be aware that when the price moves into that zone, that area, just be aware that, hey, there is a potential for a turnaround, right? Potential for a U-turn once price gets into that area. And if you're aware of that and you kind of, trade with that in mind, then I think that you'll start, ideally, start seeing better trades, because you'll be like, wow, you know what? Let me pay attention to what's going on. So, yeah, so here we go, right? Didn't even look at what was going on over here. Looked at the far left. But look how it all matches up really well, right? Look how, once again, wasn't even looking at this area right here, but how price came up, hit that resistance, come back down to that support, pushes through that resistance, hits this resistance here, goes back to support, hits resistance again, comes back to support. Kind of consolidate along this line, right, of support, right, before it drops back down, hits this level of support here, bounces around, and kind of turns it into resistance for a little bit, comes back through. Now it's all of a sudden support, comes back up, resistance, support, resistance, right? So, with that being said, will this thing come back down? That is a great question. And remember, if it does come back down, our minimum pips is about 50 pips per trade, right?
the way it usually works is that you measure out the candlestick, and then whatever the candlestick measures out to be, that's what you usually put your trade ins for, or you take profit for. And then of course the minimum is going to be 50 pips. With this right here, I mean, to the wick is out 63, but to the body is out 45, about 45. I'll probably just go ahead, if I was going to do it, put something out to about 50. But let's see something here. Yeah, it's not bad. I mean, that's about right. I mean, it takes us a little bit below support, but right around still in that zone. So it's a possibility, right? Definitely a possibility. So once again, maybe something you want to look into, right? None of the stuff that I'm telling you right now is hard, fast rules that have to be adhered to, but these are just guidelines and principles that have helped other traders over time to be successful, and also helped myself to be successful. And so I'm giving it to you, so maybe it something resonate with you and help you to be successful as well, right? Also, too, I didn't mention it earlier. The software that I'm using is smarttrader.com. If you look down at our panel, if you're on Twitch, you'll see a link for it. It is one of the ways that we help support our site here. You know, we're able to give you this information for free because we're able to, you know, be able to get a little something for when folks sign up for Smart Trader and use that software. We just get, you know, we are an affiliate, you know, full disclosure of that company. But here's the thing. Even if I wasn't an affiliate, I would still recommend the software just because of the smart tools on the software, which I really like. And I think I spoken to you about this before. The smart tools are really good, and it just really makes trading easier for if you want to come in and you need to go in and you need to put out, well, you know, where's the trend line? You know, where's the trend line at? Which way is this thing trending? Instead of you having to come out here and pull out a line and try to figure out where your bottoms are at, or your swing points, you know, you just go to your low, press it, and you're in. Hold on 1 second. Let me take this phone call, folks. Hello? 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 Okay, that was weird. Anyway, where was I? Oh yeah, smart tools, right? Smart tools is what you need, right? And this software for this company here is the only one that I know that makes the one, especially like the Fibonacci one, which I really, really love. I really, really like a lot. It's been very, very helpful. And just a really overall good tool. All right, let's get out of here. But anyway, so you guys see, you get the point of seeing how that trade went. Let me just pull up something here. So, needless to say, let's go back and look at the account history, because one thing about me, full disclosure, is I try to be as transparent as possible with everyone when I am trading these accounts, whatever. So that way, you know exactly what I'm doing, you know exactly how much I made or how much I lost, right? I'm not going to hide my losses and just boast on the winnings. And I'm going to make it known, but I'm also going to make it known as far as, you know, why we lost, what we can do to recover the loss, and how we move on from the loss. Right? So, if you look here, because we did lose on this trade here, the Great Brent Pound Japanese Yen, we're actually down $839.29, which is a huge loss for the average person, right? You know, no one wants to come in and say they lost, you know, $839. Like, hey, honey, I'm down $839. For most people, that's, you know, that's a paycheck, right? It's 1 week's worth of work, maybe two, right? So how do you take a loss like that and still come back? Well, let's talk about that loss first of all, right? And let's put it in terms as whether or not this loss is really significant or if it's just a minor setback, right? Let's put it in perspective. We had 9 losing trades and only 4 trades that are actually where we actually made money on. Think about that. 9 losing trades and only 4 trades were actually positive. So if we had 9 losing trades and only 4 that was positive, that's still less than $100 lost per trade, right? That's why money management is so important, right? Because think about if we would have lost, I don't know, $100 per trade, or not even, let's say $200 per trade, right? That'd have been $1,800 that we would have lost right now. What about $300 per trade, right? The ideal is control your losses, right? So that way, when the market doesn't go your way, it's okay, because the losses that you take are not going to be enough to knock you out of the game, right? The losses that you take, although it hurts and it's disappointing to take a loss, right? But those losses are not going to stop you from winning, okay? Those losses are just that. They're just losses, right? And losses you can recover from, right? You can make up from a loss, right? It just takes work for you to make up from a loss, right? You got to get back in there. You got to study what went wrong, right? You got to go in and you got to refine and make sure that you're doing everything in your ability to, not take the loss, right? But you can recover from it, right? This takes time. And in this particular case right here, I'm not really worried about it because, one, it's only $839. And I know you say, like, ooh, it's only $839. But yeah, the reason being is because probably with like 2 trades, 2 winning trades, maybe 2.5 max, right? I'll be back profitable again. So to see $839 is not a big deal, right? And also, too, this is a demo account. And like I always tell you, if you're trying out a new strategy or if you're just learning Forex, period, do not go out there and trade real money. Trade with a demo account so that way you can practice, you can take your losses, right? And I know everybody says the same thing. Well, if you're doing a demo account, it's not like you're doing not doing real money, so you're not feeling real emotions. You're still feeling real emotions. If you got pride, that's going to be an emotion, right? But you practice and you learn on a demo account, something where you don't hurt yourself, something where you don't go out there and just, if you blow it up, it's no big deal. It's not going to be the end of the world, right? You get it down on that demo account. Then you go out and get your mini account, right? Mini lot account. Play that. That's a real account. But you're not going to be risking a lot of money, right? After you learned on the demo and the mini, step it up. I'm sorry, the micro. Sorry, it should be micro. Then step it up to the mini account, right? And after you learn and you consistently making money on the demo, the micro, and the mini account, go ahead and step it on up to the big boy, take a standard account, because then you'll probably be ready, okay? But take your time with this. You don't have to master this overnight. Give yourself 6 months to a year to learn it if you never learned it before. And if it's something that you already know, then just kind of set yourself some goals or whatever to where you want to be unprofitable. But a big part of being profitable is being disciplined. And a big part of being disciplined is understanding the basics. And when you understand the basics and you understand, where to put your stop losses at, where to put your take profits, and where to put your entry orders at, and just sticking to it no matter what the market does, not chasing the market. So even though you took these losses, I took 9 losses, I'm only down $839, but I know that within 2 trades, because I understand the math for my account, I know within 2 trades, 2 profitable trades, I'll be back in the green. So it doesn't matter. You follow what I'm saying? Hope you guys follow and understand what I'm saying here. Right? The other thing I want to tell you too is don't trade with money that you need, right? If you know that you need that money to pay for rent, you need that money to go pay for a surgery or operation, whatever it is you need, food, whatever it is, don't trade with that money. If you're going to be out here trading, only trade with money you don't need right now, right? Money that you can afford to lose, money that you say, hey, if I lost this money, it's not going to make any difference to me at all. Like it's not going to be the end of the world. It's not going to be the end of my life, or I'm not going to get evicted, or I'm not going to, starve. Trade with that money. And if you don't have that money, then go out and learn a trade. Go out, do something that'll give you the ability to be able to earn that money, so that way you can go out and trade. Because if you don't, then when you trade with money that you need, it's going to put more stress on you, right? More added stress, and then you could potentially not only just be stressed out, but then you could be, put out. I don't know, like I say, if it's your rent money, yeah, your mortgage payment or whatever, you go out here and you risk it and you lose it, then now you risk losing, your place to live or food for your family. Okay, so only trade with money that you can afford to lose, and start out trading, especially if it's new strategy or if it's something that you've never done before, especially then trading in a demo account. Okay, no need to go live. Go live. Take your time going live. You don't have to do it right away. Right? It's no biggie. All right. So with that being said, all right, let's start looking at, well, what's the idea for today, right? What would we say would be the idea for today? I mean, what do we do? Are we going to be trading? Are we going to sit on the sidelines? Well, one thing that we know for sure is that tomorrow is going to be some big numbers coming out of the U.S., right? I think the unemployment numbers is coming out, and hold on one second here. Employment numbers is coming out, and what else we got? Oops, that's next week's. And if you're not using, even though I know that we're doing a lot of technical analysis, and I think I talked about this in one of the other videos, be familiar with what's going on in the economics news cycle for the currency pairs you're trading. Okay, worst thing you can do is go into this blind about what's going to be happening, what's coming out, and then get caught off guard, and then see a huge spike in your currency pair that goes in the opposite direction, and then you get placed out of the trade. Okay, but if you kind of got an idea what's coming through, right, what's coming down the pipeline, then you can prepare accordingly. Either you can go ahead and start taking a profit, you can adjust your stop losses, tons of stuff you can do just to try to limit potential losses and lock in profits if you know it's happening, right? I know a lot of people don't like to do the fundamental analysis side just because they feel like you have to almost be an economist to be able to do it. But trust me, there's value from learning that side too as well. We just tend to, the magazine, the blog, the Twitch channel, everything that I do here, everything is pretty much geared up towards the technical side because it's a little bit more easier to understand. It's a little bit, it's a little bit more liquid for folks to kind of capture. But the fundamental is definitely something that you need to apply some attention to because it will help you. Okay, so the news cycle, we have the change in non-farm payrolls, and the unemployment rate is coming out at 8:30 tomorrow morning. I know it says 12:30, but this is on London time, not Eastern Standard Time. And then also at the same time, we're going to have the unemployment and the change in employment for the Canadian dollar, which is going to be something that's going to be really, really watched on both ends. So if you're in a Canadian dollar pair, or if you're in a pair matched up with the U.S. dollar, just be prepared to get a lot of volatility, a lot of movement in those currency pairs tomorrow. The other thing I want to go back and talk to you about too was yesterday. One of the things that we talked about, if you remember this, was there was a gap down in the GDP Canadian dollar, and I don't know if you remember or not, but I remember it because on our last show we talked about this gap, right? And what did I tell you? That the gap has got to be closed. That window has got to be closed. At some point in time, that window is going to close. And guess what happened yesterday, right? They closed the window, right? And I have thought about getting in on this pair here, but I tell you the reason why I didn't. Is one, we're right here by support. So this is right here at the bottom. This right here is like at a real bottom, right? So only two things were going to happen. Either A, it was going to go up, or B, it was going to go down, right? Continue below. And knowing that tomorrow was going to be some big news release for the Canadian dollar, I didn't want to go in and put in a buy. I just said, you know what, let me just kind of sit back and look and see what's going to happen with this. But the currency pair actually wound up going higher throughout the day, closing the gap. which still, once again, leads me to believe that there may be something that's going to happen tomorrow with this Great Britain pound that's going to reverse all this, because this just went through a lot of resistance zones over the last day or so, and so that's a lot of energy that's been applied to this currency pair. And when you get a lot of energy like that, usually there might be a pullback. And once again, if we're talking about Elliott waves again, if you look at this right here, this could be the first wave here, right? Pushing up, and even over here, right? And so then what we would be looking for, what we would be waiting for, would be the pullback, the second wave, which would be the pullback, the retractment, and then the third wave, which would be the extension again. So that could be the place. I mean, that could be what's going on right now, right? Only way to really tell is to kind of keep watching it and keep paying attention, and then you'll know better. Okay. Anyway, so let's look at some pairs. And hold on one second, just need to do some housekeeping again. I want to look at some pairs and kind of see what we think may be good pairs to trade tonight, or this morning rather. All right, I still don't want to trade. I still do not want to be in this trade here. I just don't think I want to. I don't think I want to risk this. Although, that's interesting. I have to come back to that one. Great Britain pound, U.S. dollar. Do we want to buy or do we want to fly? Buy or pass? Buy or pass? Buy or pass? What do we want to do? We want to buy this or we want to sell this? I'm gonna tell you. I'm thinking sell on this one. And if I'm wrong, I know I will feel it, but I'm okay with it. But I'm thinking that maybe this right here is going to be a sell for this one. All right. US dollar. I think we're going to sell. I think we're going back. I think honestly we're going to go back and do exactly what we did last night. I don't really see any difference. I think it's I think that these currency pairs stretched out past their resistance lines, and I think that the market understands that, and I think that what's going to happen, you're going to start seeing some pullbacks in these currency pairs, and the thing is, you never know when the pullbacks are going to occur, right? You never know how long it's going to take, but if you set your positions up. Don't chase the market. Just put your orders in place. Don't chase the market. Put your stop loss in place, your protection in case if you're wrong. Then you just get to sit back and watch and see what happens, right? And that's what I'm going to do. I'm going to sit back and I'm going to see what happens, because, once again, this is a resistance line right here, right? And we know this because it's done it before in the past. Price comes up, it hit it, it goes down. Price comes up, it hit it, it goes down, right? Price now comes up and is hitting it now, so that leads me to believe that price then will potentially go back down. So that's why I am comfortable with putting on a sale here. Let's see, same thing here, right? So price really kind of broke through, crashed through resistance, right? But we know this is a well-known, well-documented, been resistance for years, right? I think it took a lot of energy to break through resistance. I believe price is going to come back down, right? At least retest resistance before it goes farther high. Now, it may go farther high without retesting it, but I think it should at least retest it. So I think the AUD, I think also going to be, for me, it's going to be a sell. Once again, we'll test this out. We'll see what happens. If we make money, we make money. If we don't, hey, it's fun trying. This one right here, because it's moving sideways, really, sideways and up, is so freaking. I want to stay out of this one. I think I'm gonna stay out of Japanese yen tonight. I think I will go ahead though and participate in the Great Britain Pound CAD, and that one I'm gonna say it's, I don't know if I can say the same thing right here. Let's look over here and see if we see any resistance on this one. Let's see here. Resistance. What else we got? Let's see. Let's try this again. Boom. All right. Boom. So, So it did hit resistance again. So it's at resistance right now. So this is one of those ones where it's kind of difficult, where it's like it's a it could go either way type deals. It's about 300 pips away from my all-time low. Is that it? Let's see what on the week chart looks like. And I'm really kind of making this out to be more complicated than what it should be. Hey, I don't know if you notice here on this weekly chart, right? It looks like you got you had a bottom here, it went up, and then you hit another bottom here. So it looks like a double bottom is forming. So it looks like this thing's gonna probably, what's gonna happen is it's gonna come up and it should test this neckline right. It should test this neckline right here, right? So here's the first bottom. Boom. This is the on the 19th of August. The second bottom right here, which is on the 30th of September, right? And so what should happen is it'll get up to this neckline here, and once it hits this neckline, that's going to be the telltale, right? So that's the other, that's going to be resistance again. And so if it breaks back down, okay, that's no good. It may retest the support again. But if it goes through, then you can really expect this thing to really go off. I just think we're probably just really in a, gosh, man. This could be the start of a first wave right here too. Wow. This is on a week chart. Also, too, folks, if you're not familiar with any of the terminology that I'm using, if you're not familiar with what I'm talking about here, Elliott waves, support, resistance, all that stuff, go to our website. Go to forextechmagazine.com. All right, go there. There's a ton of information there. I haven't updated it in a while, but I'm getting ready to start back. Trying to put out like weekly articles about different indicators and strategies and stuff. There's also a course there that you can download for free. And it's not only on my site. There's plenty of sites out there that you can go to and download some information for free. I say use it all right? Find what works best for you, right? And then put it to work. The more you know, the more the more you learn, the more you earn, right? Don't limit yourself. Find one or two strategies that you really like and that really works for you, and then just use them, man. Utilize them. Go for it. If it makes sense, go for it. If it don't make sense, just leave it alone. I'm gonna tell you, I'm gonna say the CAD. I think it's gonna be a downward move. I'm almost thinking that's gonna be a downward move. I don't know. We'll see. But I'm thinking that'll be a downward move. New Zealand dollar. Once again, I mean, they've really pushed the limits to getting through resistance. I'm thinking, hey, to me, this might be it's going to be a sell, to me. And I could be wrong. I mean, how many times have I actually ever been wrong before? I know, right? Only 9, right? Only 9 that you know of so far. And it's only cost me like $839 or whatever it was to be wrong. Yeah. Oh well. It's only money, right? All right. So yeah, I'm looking to and I know it seems counter to everything you see right here, but the only reason why is because we broke through resistance. So in my mind, that's the pullback, right? My opinion could change, but I think this is what I'm going for right now. I'm gonna put the trades in after we close out here. All right. If you guys got any questions, if you got any thoughts, concerns about anything, please feel free to hit me up. Please call, or not call, but please DM me, send me a message or whatever. I'd love to hear from you. Anything I can do to make this better for you, a better experience for you. The other thing that we do too is I help coach people that need coaching with trading. Trading is not that hard. It's pretty simple. It's just a matter of being disciplined. And sometimes to be disciplined, you just kind of need somebody to be there with you, to help you, hold you accountable for what you're doing, and kind of question some of the things that you're doing to make sure that you're doing the right things. And I do that with folks. So if you feel like you need that, call, hit me up. We can discuss, what it'll take, and pricing and all that good stuff. The other thing is, like I said, this software that we're using right now, we're doing a demo account right now currently, but in about 2 weeks or so, I'm going to go over to a live trading account. And once we get the live trading account going, we're going to up what we're doing on this account here. We're actually going to be using the paid version. Right now we're using the demo because we just want to kind of use the demo with everyone else and just kind of, get the same experience. Want everyone to learn this as we go along. Oops, there we go. It's the candlestick right there. I want everybody to learn this as we go along. And hopefully, the goal is to kind of get everyone up to speed. So when we're doing the live account, that we're being profitable on a consistent basis, and either eliminating or limiting our losses. At any rate, I want to thank you guys for joining us. I'm about to jump into this trade here in just a moment. I want to thank everybody for joining us, coming out, and I want to end it on a positive note again by the great Zig Ziglar. He once said that if you can have everything in the world in life that you want, if you can just help enough people in life get what they want. So once again, if you haven't went out and done anything charitable or helped anyone that's in a less fortunate situation than yourself, do it. Be a part of something bigger than yourself. Go out and help somebody that you know for a fact can never possibly pay you back. It's not only going to be good for them, but it'll also be good for your soul. And in your course of helping people over time, you'll start to find that folks will pay it forward and return the favor back to you. Anyway, hope you guys be safe. Have a safe weekend. I hope you guys make a ton of money today. And look forward to speaking with you again Monday morning. All right. I'm out of here.